I'm now being joined live virtually by a macroeconomic analyst from Chapel Hill, Denham, Bolade Agbola. Good morning. It's a pleasure having you join me on the program.
Good morning. It's a pleasure to be here too.
Good one. Now, you've seen the projection. While we're still expecting the National Bureau of Statistics, that's the NBS, to send in the inflation figure for the month of September, we've seen the projection made by FDC. Now, I'd like to know, does this come as a surprise to you, or it is expected, Bola?
It doesn't come as a surprise because here at Chapel Hill, Denham, we forecast inflation for September 2023 at 26.78% year on year. And this increase in inflation that we are expecting is based on three major factors. First is the foreign exchange illiquidity issues that we are facing currently, and we can take a cue for average exchange rates at the parallel market, which Naira depreciated by 32% year on year. And looking at the I&E window, Naira has depreciated by 74.2% year on year. That is average in September 2023 and in comparison with September 2022. Another factor that we also looked at is the agricultural value chain, in which there are still major challenges in which have already even become legacy issues, such as the infrastructure, insecurity, which stifles supply and in turn impacts domestic price stability. Another factor that we would also talk about is the petroleum product prices. I'm taking diesel, for instance, in which averaged around 864 naira per liter in August 2023.
Okay.
Looking at markets and indicators in the market, it is already selling at over 1,000 naira per liter, and we expect this to impact logistic costs, transportation costs, which in turn, impact adversely, inflation in the economy.
With all that you said thus far, Bola, it shows that the economic reforms made by the current administration in its over 100 days in office seem not to be having any hold on inflation. Why is it so?
So, from my own perspective, yes, I would like to, think that these reforms that have been done,
yes,
are supposed to be positive. They pose positive impact on the economy, exactly, but these are not the positive impact that we would expect. Is not expected in the short term. Okay. So it's a long-term thing, a long-term initiative or result that we expect is for the long term. Another thing is that there are things that are needed to be done to see the kind of impact and also see the kind of result that we want. First is improving FX liquidity in the economy that would meet up with demand, and we will not see the exchange rate going as high as 1,000 on the parallel market, yes, and even 770, 800 on the I&E window. I think there are some things that should be put in place already so that this impact, the impact that we are currently seeing, would not be so.
Bola, you will also agree with me that one of the measures that the monetary policy has been using over time to cushion inflation is the hike in interest rates. Sometimes it goes up, sometimes it's been retained, and sometimes it's been reduced. Now we have a new man in charge of the affairs of the Apex Bank, and we're supposed to have an MPC meeting for the month of September, which did not hold because there was a change in leadership at the echelon, at the top echelon in the Apex Bank. Now, looking at what is being the Apex Bank now management team is being faced with now, scarcity in the forex market, high inflation rate now. Is it in the best interest of Nigeria if these guys decided to hike the interest rate in the next MPC meeting in the month of November, which is going to be the last for the year? What's your thoughts on this?
My thoughts on the interest rate hike is that there will still be an hike, because we've seen that money supply has also been trading upwards since the start of the year.
Yes.
I expect that there will be an increase in the monetary policy rate.
Okay.
This is as a result to curb inflation. We know that inflation, we have the money supply end of it. We also have the cost part of it. So in order to improve, to curb inflation from the monetary aspect of it, we still expect the monetary authorities to raise rates in its next meeting, although at a lower aggression compared to what we have seen in previous times.
Bola, now another big question I have for you now is, how long are we going to continue to hike interest rates to tackle inflation that seem not to be gaining any form of respite, even as macroeconomic headwinds are shooting off the roof?
Well, from my own perspective, I believe that the monetary authorities would do whatever it takes in their capacity to curb inflation, being that price stability is their mandate as an authority. So, and I also believe that there will be other forms that will be taken in order to improve inflation, such as what we've seen in previous time, where there's a liquidity squeeze in the market. So we believe that they will use every channel or every opportunity or every resource that is available to them to continue to combat inflation. But for interest rate hikes, we believe that for the near term, in the near term, that's between now and the end of the year, we'll still see rate hikes.
The Bank of America, has projected that Nigeria's inflation rate will actually hit 30% by December this year. Now, with the surge of the inflation figures that we're seeing now, do you think that Nigerian inflation will actually meet up to that projection between now and December 2023?
Yeah, from my own perspective, I think that there is a possibility that happens, and it will not be surprising, especially if factors like I earlier mentioned are not resolved and they continue to pose risks to domestic price stability in the long run.
Now, Bola, what will you say will be the ripple effect of surging inflation on the average Nigerians amid the volatility that has been faced in the Nigerian economy at this point in time, where fuel subsidy removal is still biting hard on the average Nigeria? The cost of transportation is on the high side. Government has made promises to us, but nothing has been done in that regard. And also, the price of food commodities also on the high price. What's the ripple effect of these on Nigerians? That's the average Nigerians on one hand, the standard of living, and on the other hand, the ripple effect on businesses. What's your thoughts on this?
Okay, for an average Nigerian, this is expected to further impact more pressure on disposable income. And for businesses, this would lead to higher costs for them, and in turn, in order to meet up with their margins or projected profits for the year, there is going to be an increase in prices of their goods and services, and the ripple effect is still going to come to consumers. And like I said earlier, this is going to exert more pressure on consumers' disposable income in the long run.
Let me get your outlook now for inflation. Okay, fine. It has been said by different analysts that Nigeria's inflation rate will continue to surge in the course of this year. Now, in the long term now, do you see inflation rate actually declining? And if yes, what percentage do we see inflation rate getting to? And then again, let me put you on it. Hot seats, do you see Nigeria's inflation rate actually coming to a single digit in the shortest possible time? Is that possible?
In the shortest possible term, I don't think that would be possible for inflation to become a single digit. But we know that given the fact that the Nigerian government have put in place several structures and come out to say things that they are going to do to help ease infrastructure in the country and improve productivity, would expect that in the long term that inflation will moderate. We've also seen that the government has also mentioned that they are expecting GDP at 8%. So it will take a lot of infrastructure, a lot of willpower from every stakeholder in the government to ensure that this goal or objective is met, and that would mean that there is impact, like that would mean that they are able to tame inflation in the long term also. For figures for inflation,
Yes.
we expect that average inflation for 2023 would be at 25.16%,
Okay.
which is still higher in comparison to the average in 2022,
Okay.
where we saw about 18.8% for the year.